Right, well, good evening, ladies and gentlemen. So this is a double act, this session. Mark Wright is our Chief Financial Officer. I'm Jonathan Neame, Chief Executive. And I'm going to talk about beer and pubs, a sector that most people have got an opinion about, lots written about. Quite a lot of it recently has been quite negative, a challenged sector. So I'm hoping that in the next while I can persuade you that it's a sector that's worth investing in. And even if you don't believe that, there's a free bottle of Christmas ale out there for you on your departure. So a few facts and figures, first of all. We're the oldest brewer in the country, roots going back to 1573. We're actually the oldest manufacturing site in the country of continuous occupation. I'm the fifth generation. There were many generations of shepherd before that and a partnership in that period. Brew about 35 million pints of beer a year, win lots of awards. I'll talk about our beer brands in a minute. We own and operate 290 pubs, mainly in Kent, two-thirds in Kent, and the rest in London and the South East. And you can see our financial figures there, which Mark will talk more about in a minute. And we are listed on Aquis, the very junior market. So what are we trying to do? We aim to be the leading beer and pub operator in Kent and the South East. We've got three different business divisions. We're pubs that we own and manage directly. We're in charge of the whole offer. There are employees. And pubs that we own but we rent out in the tenanted sector. And then our brewing and brands division, where we're trying to create brand value and, of course, create beers that we can sell in other channels, export, supermarkets, and what we call the local on-trade. So our strategy is very simple. We want more customers. We want, for all of our different touch points, we're trying to recruit more customers, more volume, more footfall. When those customers come to our businesses, they're not really coming for a functional experience these days. People don't need a beer. Nobody needs to go into a pub, but we need to attract them by giving them a great time, a great experience. We're trying to sell a bit of sunshine, a bit of fun, and occasionally a bit of laughter, which these days is in short supply. To do that, we need a great team of people, and the hospitality sector has struggled historically to retain people. It's been a sort of area where employment is fairly temporary. That is changing very rapidly. All hospitality sectors are working very hard at their people learning and development. And so we can then build a great team of dedicated people. If all that works, we create passionate advocates. The previous speaker talked about a 10-minute drive time. It's exactly what we're trying to do. We are a community business. We want people to keep coming back to our premises, for our premises to be the best in that community as defined by a 10-minute drive time. We want regular purchase, and we want to be there for many generations. On the right-hand side, you can see here that we are not a Wetherspoons. We are not looking to sell on price. We're not looking for new builds. We're looking for really distinctive, unique, characterful buildings to define our pubs. We want them to be superb facilities, bringing out all the character of their heritage, but also have all the modern facilities to keep people attracted there. And we want people to be attracted by the distinctiveness of our drinks, the quality, the range, and the quality of our service. But throughout all of this, we are a brewer, which remains quite unusual these days, a brewer that still has a pub company. Many of our competitors historically, like Fuller's, Young's, have all exited brewing. We see it as a key part of our DNA, a differentiator, a footfall driver. ESG, I know, is really important to investors these days, and this is something that we don't think is kind of a new thing. It's part of our DNA too. We have been sourcing locally food, raw materials for multiple generations. It is really important that as a community business, we look after our community as well as our customers expect them to do so. We have goals, net zero carbon for direct emissions by 2030. That's ambitious, particularly in the current climate. Net zero for scope 3 by no later than 2040, and zero waste to landfill by 2025, which we achieved this year in our offices and brewery, nearly there in the pubs. And you can see along the bottom there the very high sort of local sourcing credentials that we've got. 80% of our hops are sourced locally, most of them within 10 miles. We are in the heart of the hop country. Almost all of our malt is sourced locally. And then we've got all kinds of very high metrics in terms of our energy consumption and recycling. So if we just trot through firstly brewing and brands and then pubs, and then Mark can talk in more detail about the financials. In terms of our brands, our most famous brand is Spitfire. Some of you with long memories may recall some slightly risque adverts that we had about 20 years ago. Sadly, we're no longer allowed to run those, but there we go. And we also have a very popular beer, pale ale called Whitstable Bay. These ranges tend to come with lagers and ales. We have a more sort of what we call hop-forward American-style beer in Bear Island, very different style of beer. And then we have our sort of innovation stream, which comes out of a different brewery within our brewery called the Small Batch. What we're looking for here is to create get onto newer trends, and there are many of them about at the moment, and then if we can scale them up to the main brewery. One of those on the slide here is First Drop, which has been extremely successful and is the sort of beer that is in the Beavertown category, so high value, relatively low volume, very hop forward, but if we can brew a beer of that type and then sell it in our pubs and achieve premium prices, the value creation from grain to glass is very significant indeed. We also have a sort of great classic called Bishop's Finger, almost entirely sold in the supermarkets. Very rich, dark beer, wins all kinds of awards, and is very popular. Tends to be more sort of older profile and male, but people used to say that about Guinness, and that's become the trendiest drink around, so trends can change. And then as part of our sort of overall portfolio, it's quite important that we've got a world lager in our portfolio that is that customers are interested in, because the customers are looking for a composite delivery of beer, wine, spirits, minerals, and the full range. So we've, over the years, brewed any number of beers from different parts of the world, Kingfisher, Asahi for about 12 years, built that up. And at the moment, we have a partnership with the #1 brewery in Thailand called Singer. Now, this gives us a platform into the restaurant sector, which is very appealing and very attractive. Thai food is one of the fastest growing segments of in the eating out market, and we sell it in our pubs as well. So this is a partnership with a very, very substantial brewery. They then put in sponsorship on top. So off the back of this, we sponsored the Open Golf this year. We were the lead supplier and sold something like a staggering 284,000 pints in 4 days, which is a good customer to have. And we supply things like Chelsea Football Club. So this gives us leverage by using that partnership. Our strategy in the beer business is what we call win in Heartland. Heartland we define as anything in that lighter blue there. The brewery is just northeast of the E of ME. I don't know what's happened to the Isle of SHEP. I think it's sunk in the meantime, but it is there somewhere. And that's a 2-hour direct drive time from the brewery. So our furthest pub is Frinton, and our furthest pub west is in Bournemouth. So we are trying to essentially use high quality service to sell our composite beer portfolio and those ancillary products of beer, wine, spirits and minerals. And we are trying to sell them in that territory, but win within that territory what we call Heartland hero accounts. So every community has got its great pub, it's got its great restaurant, or it's got its great sporting venues. We over-index in terms of our ability to supply sporting venues. These are just some of the places, or entertainment venues. Dreamland, bottom left, Gillingham Football Club. We're doing very well with the football clubs at the moment, doing Millwall, Leyton Orient, and 1 or 2 others in the pipeline. Kent Cricket, as you'd expect us to do, and then local events such as the Faversham Hop Festival, but many other seasonal events that take place in the summer. So all of this gives us an opportunity for people to try our beer. If they like our beer, either buy it online, buy it through the supermarkets, or visit our pubs and engage with us in that way. So if we look at our pubs, as I said, there are 290 pubs. We pride ourselves in the distinctiveness and the character of these pubs. They've all been sort of hand-selected over the years. We really like old buildings. We're looking for something where the building itself speaks for it. One here is just up the road, the East India, famous old pub, Jamaica Wine House, just around the corner, just off Cornhill. But we're looking for locations that are either got a natural footfall like in urban areas, or a natural honeypot destination, particularly when the sun shines. So all around the Kent coast, we've got a string of pearls, as we call them, where if the sun shines, they can be extremely busy destinations. You can see the breakdown there, about 2/3 in Kent, but we've got a very strong portfolio of 42 pubs in London, and those fringe counties, Sussex and Essex, equally we've got some very dominant positions. As with the previous speaker, we are active property managers. We are constantly buying, constantly selling, constantly trying to move the centre of gravity of our pub portfolio upwards. And you can see there that in the last sort of 14 years or so, we've sold 100 pubs, made 40 acquisitions, but the average EBITDA per unit has gone up materially in that time. So some examples of different profiles. Bottom left is right in the centre of Whitstable, very big weekend destination, DFL down from London Place. It's a busy drinking pub, busy food place, but it's also got rooms. We just developed it there. That sort of unit in the summer will take 50,000 a week. In the winter it'll drop back, but kind of that should be and is, in our view, the best pub in Whitstable. Crown in Blackheath recently developed, more of a community style pub, more 80% wet, 20% dry, great for Sunday lunches, less good for food lunchtime, but much more of an evening sporting music type place. Again, takes about 30 to 40,000 a week, is highly profitable. These two are tenanted. The Bishop's Finger, we've just bought the freehold in central London, in the heart of Smithfield, taking a long-term view. We know what's going to happen with Smithfield Market, material change. By 2035, that will be an outstanding location. At that point, we will probably take it back under management and retail it directly. The Ship at Herne Bay is a tenanted pub. We won't take that back under management, but you can see it's the oldest pub in Herne Bay, lovely location just overlooking the sea. It's that sort of honeypot that I was talking about a minute ago. Some of the interiors, we're trying to premiumise our pubs. That doesn't mean turn them into wine bars or make them too posh or whatever, but just give them the sort of modern interior that customers expect these days. And at the moment, we're investing a lot of capital to upgrade our estate after our hiatus around COVID. So I'm going to hand over to Mark now, who will talk about the financial performance and the outlook.
Good evening, everyone. Great to see you all tonight. So yeah, as Jonathan said, I'll take over now and just give you a quick update on our financial track record and talk a little bit about kind of future prospects, acknowledging a few short-term challenges, and then just conclude the presentation. So here, just a little bit about our financial track record. So what I've got on here on this slide on the left-hand side is our most recent results, which were to the end of June 2024, and a little bit over a longer term period on two key metrics we look at in terms of net asset per share and dividend per share. So just most recent results, they've obviously come back on the back of some more challenging years since 2020, where we've had some COVID-affected years, 20 and 21, and then the high level of inflation we saw post the Ukraine war. But despite that, a year of growth in 2024, with revenues up to £172.3 million, EBITDA up to £25.1 million, and underlying profit before tax up to £7.9 million for the year. As I mentioned, we're very focused on two metrics over the long term and looking to deliver long-term sustainable growth in those for shareholders. So those are net asset per share, which went up to £12.17, and our dividend per share, which was at 20.7 pence per share. Now you can see there that chart goes back to 2004, and you can see, with the exception of the financial crash and then the COVID years in 2020, a steady progressive upward direction, which is exactly what we're targeting to do. And if I drew a chart that went back another 20 years before that, it would be a very similar pattern. That's very much the act of what we're trying to do, build that sustainable growth over the long-term period. In terms of the balance sheet perspective, we've got an 85% freehold mix in our pub estate, so the balance sheet's underpinned by that freehold value and a strong financing position that sits alongside that. So we've got a mixture of long-term and short-term debt, that goes against that, some going out to 2038. And of that piece, 85% of our drawings on that debt facility underpinning our asset base are on fixed rates of interest. So that's a little bit about our financial position and shape and the history over recent times. Just a little bit now more to move on to what our kind of growth opportunities are. And we sort of conclude that in two key ways. The first way is, again, comes back to our track record and a track record of organic growth across the business. So again, what you'll see up on the top right-hand corner is a chart of our pub performance going back to 2014. So that's a 10-year period excluding COVID, and just demonstrates our confidence and ability to deliver organic growth across both our pub estates. So that's our managed retail pubs, the ones we run ourselves, and our tenanted estate, as Jonathan mentioned, consistent like-for-like growth across those periods. So we've got that capacity for organic growth, but I think as we sit here today, we also have a slightly unique opportunity as we look forward in our heartland, which is at the moment going through quite a transformation. So Kent historically has been a farming, it's been a mining, and it's been associated with ports for some time, and has been in transition to more modern business and now more modern infrastructure. So we've seen a significant increase in infrastructure investment across the county, and on the back of that, an increase in houses and employment that goes with it. So you've got a map down there on the bottom right-hand corner. You probably hear a lot about HS2. We actually benefit from HS1, and that's made a massive difference to the commutability of certain Kent towns into London. So commuter times have really been cut from key conurbations such as Ashford, Canterbury, and now going on to the Thanet coast, so areas such as Margate, Ramsgate. We've already seen a number of people moving out post-COVID to benefit from those shorter commutes. In terms of future infrastructure investment, there's always the possibility of the extension of the Elizabeth line into North Kent, and an expectation of the Lower Thames crossing, the road crossing, to come in place to join Kent to Essex, which again will completely transform transport across our county. So we'd expect our heartland to grow. I know the University of Kent have done some modelling that shows significant house building and job expansion over a 25-year period, something like 250,000 new homes and 230,000 new jobs over that period. So we could see significant growth over the long term, and we already have the best pubs in that area. We've been doing that proactive asset management to benefit from that infrastructure, from that growth in employment, and from that growth in population. And as we see those new customers come in, we also see the start of an evolution in our customers and our guests that are coming into our pubs. We'd expect them to value more premium experiences. We do feel they'll be a bit more health conscious. Some of those visits will include less alcohol. But we also expect them to really value provenance and authenticity. And I think that's where we feel we can really score high with our heritage and our strategy that Jonathan's just laid out that really looks to leverage that change in customer base over the coming years. So that's very much the long term. Clearly, the hospitality sector has had some short-term challenges, and I'll just talk a little bit about those now as we're coming into the coming years. So we've had a number of years of inflation coming out of, as I mentioned, of COVID and the energy crisis that came about subsequently. And we are looking at a year coming forward where that inflation continues. So the recent budget, it's well publicised that consumer and retail businesses have further inflation to come through labour rates. So we'll see that in our managed and retail pubs, and an increase in obviously national insurance costs. And we've got some secondary cost inflation pieces that are also coming forward in both sort of pub design and development costs, and also the fact that we're investing through a new distribution agreement in that heartland map that Jonathan just laid out, which is very much around having a dedicated, high-quality distribution agreement and facility across that heartland. So we will see some short-term inflation, but we also see the fact that the environment is right for consumer confidence to start to improve. net disposable incomes can improve with lower interest rates, and obviously the other side of labour rates increasing through things such as national living wage means this disposable income and potential to spend in our pubs could go up. We've also got a strong pipeline on the board. As Jonathan mentioned, we took a hiatus for investment through COVID to protect the balance sheet. We've got a number of pub developments waiting to go that we're quite excited about, and a pipeline of on-trade customers and potential customers to come forward over the coming years. So just to kind of conclude, therefore, from that side, we are SHEP and Neame. We are the oldest brewers in the country. We're very proud of that heritage, but hopefully you've seen from this that we're very much set for the future. We're a balanced hospitality business that's well funded. We're a business that's very much got a strong purpose and at the heart of its communities. We've got a track record of providing sustainable growth over a long time period, but also on the cusp of transformational development across our key trade of heartland of Kent and the South East. So thank you very much. I think we'll probably move to questions.
Okay, thanks very much for the presentation. Any questions on the floor, please? This gentleman here, Steve, thank you.
Very interesting presentation. I do like some of your brands. However, having said that, what challenges you have with the younger generation drinking less and the proposition that low alcohol drinks are preferred by the government and is what the new generation's going for? Secondly, as a prospective shareholder, will you give me a shareholder perk?
It's out there.
So on the lower, no. I mean, yes, alcohol trends are declining, but at the moment, most of the overall alcohol consumption reduction is in spirits, not in beer. Beer is actually quite robust. Beer's got a great differentiator because ultimately it is a low alcohol drink. And brewers are experimenting more and more, not just with 0.0 and 0.5, but 2.8, 3.2s. And you can still produce a very good drinkable product at that level. So I think the government will clamp down and push down hard on the heavy spirits culture, which did exist sort of 15, 20 years ago. At the moment, 0.0 and 0.5 is a tiny part of the market. A lot of noise, a lot of chat, but it's way less than 1%. It will grow, but I can't see it ever being more than 5, 10% of the market. I think the government will look at sort of clamping down on advertising and restrictions as you have in other markets, but actually in a sense that drives your choice to the bar font, and that's where if we own pubs, we've got a bit of an advantage there. So I suppose the final point to make, which is quite important in this respect, is I don't see the pub stopping being the community centre for socialising. It has changed multiple times over multiple generations, and it will adapt again. But humans need to meet, they need to eat, they need to drink, and they will continue to do so in a community centre if it's attractive enough.
Okay, thank you. I've got a couple of questions. How did you get a royal warrant by the King?
Good one. Well, we actually had a royal warrant when he was Prince of Wales, originally for a cherry brandy, believe it or not, Grant's Morella cherry brandy. Then that was one of our shareholders here likes it, and that was then expanded to our beer range, particularly Spitfire. And as it happens, his father, the Duke of Edinburgh, was a very keen drinker of Bishop's Finger, which I can say now that he's deceased. I didn't answer your question about shareholder perks. We do have a shareholder card, a gold card. We have a black card. One here, good discounts off drinks and food and accommodation, and our online shop up to 30% off. That should be enough to convert you.
Steve, this gentleman here, Steve, please.
Just a quick one.
One sir, just to recall you.
On that card, on the card, I mean, can you get it if you're in a nominee account, or do you have to be a certificated shareholder to get that?
Yes.
Yeah, we can arrange that.
You can get it through Interactive or Hargreaves or whoever.
You have to instruct your nominee.
You're not allowed to say that, by the way.
You have
You're not
to
allowed to say that.
either instruct your nominee or just write to us and we can sort it out. But nominees are a bit of a problem.
Apologies.
Sorry, I'm joking.
You're preaching to the converted with me because I've been a shareholder. I think it was the same year you acquired a package from Punch pubs, including 2 really excellent Guildford pubs, which I frequent, which is the Britannia and the Star, which I suspect you're familiar with. But my question is, the discount on your net asset value would give a fund manager, a REIT fund manager, a heart attack, I think. It's just doing a rough calculation, it looks like it's about 55%. Is there anything you can actively do to reduce that? And I mean by not the net asset coming down, but the share price going up to meet the net asset per share.
Well, let me start and I'll let Mark add to that. I mean, it clearly is an extraordinary discount. Actually, it's more than 50%. It's nearly 70% at the moment. It drives us nuts. I mean, I think, firstly, there is generally a negativity about hospitality. I don't think people can see the wood from the trees in terms of the casual dining sector, which is severely stressed and is mainly leasehold, and they don't have the asset backing from the pub sector, which is basically a different proposition. So there's the one element. There's clearly the budget news, which is sort of negative in 2 respects: national insurance contributions hitting all retail, leisure and hospitality, and secondly the BPR reduction, the 20%, which obviously brought some capital into the lower markets. I think the third thing is people don't quite know what's happening to smaller markets, flight of capital out of Aim, Aquis, etc., etc. And I think personally some of the sort of traditional market maker broker world is struggling to deal with companies like ourselves because they're not holding the shares sort of very long. The IFAs are struggling to recommend it, etc., etc. You just have to fill in so many forms that if you're on Aquis that this is for the brave and, you know, only dragons beyond here, that sort of thing. I'm trying to be flippant to make the point, but so there are so many regulatory and difficult hurdles to get through. But I hope you can be persuaded that there's a very robust business here and a very sensible long-term business that has survived many vagaries for 400 years, and I see no reason why I can't continue to do so. But I can't do anything more on the share price except attend audiences like this and try and find a new audience of retail investor.
And thank you for doing that as well. I suppose one of the dangers of having that huge discount is you might be on the end of an opportunistic, unwelcome bid.
We might. I think it would get a fairly strong raspberry. I think that it's. I mean, the family still controls about 50% of the shares, but beyond that, we've got a huge number of retail investors who've held shares for many generations, many of them local, and I think, you know, there is. In beer and pubs, there's a slightly different mentality about investing. It's not driven entirely by the economics. There clearly is a bit more of a loyalty factor driven by other experiential and local things. So clearly one would hope not, but I don't deny that risk could exist at this moment in time.
Thank you.
Gentleman over here, please. Yep.
Can I ask about, which is related to the previous question, liquidity and spread on the shares? How can we improve that, which would make it better for investors?
Well, I think it's absolutely more of the same thing. What we're really trying to do is try to drive up demand for the shares on the basis of showing both the quality of the business and the future prospects that we have. So I think that's going to be our message continually going forward, attending things like this, getting out and marketing and really bringing to life what the business is. Because we are in the southeast, we're not nationwide necessarily outside of some of our supermarket business, but what we really want to do is communicate the quality of the business to help try and drive demand up for our shares, which should help all of these matters, really.
And what about where you're quoted? Change. Aqua's market is the market that you're quoted on, the exchange you're quoted on?
Aquis.
Any views on that? Would it be better to be quoted elsewhere where there's going to be greater liquidity?
Well, there's a number of aspects to that piece. Aquis has served us quite well actually in recent times, and our levels of liquidity and our discount historically were much more favourable than they are today. There's clearly a number of things that we would have to evaluate in that piece, not least the cost of any listing that goes with it. What I would say is that we try to hold ourselves up with the highest quality of standards, so that we can give confidence to investors across the piece. So, we are QCA compliant. If you see our annual report, it's very full in disclosure, and we kind of over-disclose and over-governance, in effect, beyond that listing to try and, again, give more confidence to investors when they're looking at us.
Excellent. Okay. One more question here, quickly, please. Hang on a second, sir.
Thanks. Very good. There's clearly an abundance of choice that consumers have nowadays, and you mentioned the changing demographic and younger drinkers' preferences. Just how do you conduct your research of trends so you can tap into the next emerging new hot product, such as Guinness or something,
We've got multitude aspects of consumer research that we can access, both internal and external. So very much market trends. We've got a hotbed of development, as Jonathan's just mentioned, in terms of the small batch brewery, so we can move quickly to bring out small batches and trial those. We've got our own kind of consumer club that goes across, so we can run independent consumer clubs across our pub estate and ask questions and get research in from that side. So, yeah, I think we've got a number of things that we can look to do to test around the pieces, and it's very much around testing and then moving quickly when these trends come through, really.
Okay, thanks a lot.
Thank you very much. That's brilliant. Thank you. Thank you, Jonathan. Thank you, Mark.